First-time home buyer, to use an FHA process, which is 9 times out of 10, your higher percentage of people that are going to be purchasing homes, first-time home buyers, are going to go look for that program. So they're going to be, so that's good. We'll go with the FHA. Their expectations are is they're going to have a minimum of 2 years of income. They're going to have to have been working for 2 years. Okay. Also, they do have to show some form of savings. It doesn't have to be a high level. It could be a couple of $1,000s rotating in a checking account that they use to pay their bills. It doesn't have to stay at that amount. They could have that $3,000 go in or $4,000 go in their checking account and have that depleted by bills that they're paying down to $100. It doesn't matter. It shows the propensity to save money, and that's very important. The FHA in some senses will actually allow a person to qualify if their credit qualifications are minimal. It'll allow them to use deposits in the bank to show like a trade line, okay? Another thing as well is trade lines. An initial person that's coming in to purchase a first-time home buyer will also, again, they're in their job for a couple of years, they're just starting in their life, they're growing. Their credit might not be, you might not have 10 credit cards, student loan, or probably student loans, automobile loans, those types of things. FHA allows them to have a smaller credit grade. They can have a credit score also, which when you're first starting out in credit, when you're building your credit score is not going to be in the 700s, 800s. You're going to build it as you go with the accounts. They allow up to as low as 3 trade lines. Basically, if they have a JCPenney's card, a credit card, and a automobile loan, okay? They'll allow them for credit qualification as well, which enables them to be able to get an FHA loan with a credit score as low as 640. The other things they would be looking for, and that would be qualification-wise. They have 2 years of income. They have a decent, small rotating amount of savings. Their credit score has to be above a 640. And then at that point in time is when they would call us, and they would let us know when they know they have that and they have the house that they're looking for. I would highly suggest that they would give us a call, or if they have a trusted loan consultant or mortgage consultant that they use, give them a call as well. But if you're coming through my process, you would give us a call. We would go ahead and take those factors. We would run an application for you, and we would be able to give you a pre-approval. That's the critical part about purchasing, whether it's an FHA loan or any type of loan. But with an FHA loan, you would come to a mortgage consultant first, because if you go directly to a realtor, then the realtor is going to control the transaction, which is fine. They're trusted. But if you want to control your own transaction, the first thing a realtor is going to ask you for is a pre-approval letter. They don't want to even take you out to look at a house unless they know that you're credit qualified, unless you're going to pay cash. So you contact us, you call our 800 number, you get one of our trusted consultants on the phone. They're going to take you through 6 points of qualifications. They're going to pull your credit. Okay, and then at that point in time, from what you say, you want to be truthful in what you're talking about. You give them that upfront information. We're going to be able to go ahead and authorize you a pre-approval letter. That gives you power. You walk into a real estate agent's office, say you see a house that you like. You look at the information. You get the realtor, and then you walk directly in there. And as soon as you walk in that realtor's office, she's going to ask you, "You like this house? Let's get you set up with a mortgage." You hand her the pre-approval letter, and then you're walking in there with a little buying power. So it enables you to be able to go in. And that right there, the pre-approval itself, when you're putting a bid on a house as a first-time home buyer, it's critical to know that by being pre-approved, when you put in a bid on that house, if the house is $200,000, and you see, hey, it's basically right now at this time in 2012, it is a buyer's market. Values are down. So sellers are very aggressive and they want to sell. So you could walk in there and put in a bid at $180,000. And with that pre-approval letter, it gives you the power to say they're going to take it seriously because they know it's going to be a loan that will close.